Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel L. Conan, along with Brianna Valesky, and we have Karan Sood on the line. He's the co-founder and CEO of Vest. Karan, how you doing on this Wednesday morning?
I'm doing great, Joel. Thank you.
Thanks for
How
coming
are
on.
you?
Doing good. Thanks for coming on the show today. Could you just give us a little bit of your background in the markets and how you ended up in your current position?
Sure thing. As you did say, I'm Karan Sood, co-founder and CEO of West. I do come from the industry, spent about a decade, and half of that in the sell-side bank in equity derivatives, and towards the latter end of that as on the buy side, making and designing investment products such as ETFs, mutual funds, UITs. And about 2 years ago, we started West.
Okay, so tell us about Vest.
Sure. West is an investment advisory firm. We have built an online investment platform that allows investors to build what we call protective investments. These are investments that have a degree of protection against downside losses built into them. So investors can pick any major stock or ETF. We have a selection of about 600 names on our website. Once they pick that stock or ETF, they can select the level of protection they want against downside losses, and either pay for that protection with an upfront premium, just like typically someone would be akin to paying a premium for insurance, or they can pay for that protection by giving up some of their future upside, and as a result, pay no upfront cost. So we built an entire platform, an online platform around such investments. Investors can build protection on a stock or ETF that they already own or that they're looking to get into. They can review sample investment terms and some popular stocks or ETF. We also have features on the website where they can scan the market for the entire market for investments that are attractive, protective investments on that day. For sort of more sophisticated investors, financial advisors, we have the ability to build entire portfolios of protective investments. A lot of financial advisors come on and build an entire portfolio for their clients just using these protective investments. And then for some of those, they also some of the more power users, they can build protective investments with enhanced features such as income, leverage, or inverse. So really just the entire ability to look at investments from a new perspective, which is having a degree of protection inside them.
So do you use the options markets, or if you're buying a tech stock, do you use a tech ETF to lay off the risk? What do you use?
Yeah, so it's great that you caught on to that. So we really do use options.
Mm-hmm.
So you can think of us as making options easy and accessible to investors who might not be very familiar with options or would be confounded by the complexities around options, but like the benefit of the fact that you can get protection through options. I can illustrate that by giving an example. So you could go to our website, you could pick an ETF, let's say the most popular ETF out there, SPY, which is tracks the S&P 500 index, and then just confronted with a very simple interface where you can pick the term of your investment, and then you have sliders where you can slide and you can say how much protection you want on the downside. So you have two sliders, which with the first slider you can set where your protection starts, the second slider where you say where your protection ends, and then you have a slider on the upside which tells you how much of the upside you want to cap. And so you can play with these three sliders, and as you're sliding them around, it'll tell you in real time what the price of the investment is. And you can sort of play around, optimize. We help you with some tools to make the investment a zero cost investment. and then you can click a button and get it. And behind the scenes, because you asked the question, what we're doing is really mirroring what combination of the ETF plus a set of options are going to give you that. So we're pulling that data from the market, computing the investment, and then when you want to execute that investment, we just go back into the market and get those securities into your account. So effectively, you got the investment with the protection, and we sort of solved all the complexities around dealing with the options for you with an automated engine.
So, I mean, is it just kind of an offshoot of covered calls with puts underneath? Is it more complicated than that?
Yeah, no, so again, it's a function of what kind of investment an investor builds. So let's say they build an investment where they're capping their upside and they're getting protection for, let's say, the first 10%. Then yes, it's you're basically buying a put spread and you're selling a call and then a long ETF. So it's like you said, it's a combination. There are other sort of aspects to it where we are trying to even optimize to the level of whether you want to buy the ETF or do you want the exposure to the underlying asset through the options. And we optimize it for where the market is pricing as a spread that second. And also, like what is the commissions and transaction costs you would pay for that specific example, right? I mean, but there are other examples where you could be getting income. So we sort of are automatically setting a ladder of covered calls out in time. Or if you could be looking to get a sort of a more leverage position, so we'd be adding more calls to get you the leverage position. Or if you were trying to take an inverse position. So investors are effectively going onto the website and expressing the outcome that they desire in a language they understand, which is the kind of words I've been using: protection, upside, enhanced upside, or inverse, taking the profiting from downside. But behind the scenes, we are like picking automatically the options, the combination of options, optimizing for the best sort of transaction cost minimization and things like that. So to a trained eye and for a very simple strategy, you're right, it could be construed as like something very simple, which someone who's trained can do it themselves. But for someone who's not familiar and someone who's picking sort of a more sort of an improved strategy with some bells and whistles to it, there could be complexities around it, which the automated feature of the website makes it very simple.
Oh, so you can add, that tells you to do the trade, or could you actually do the trade through your website?
Yeah, so we offer a complete service where you come to our website, you'll open an account with us as your advisor, and then we also mirror an account with a custodian. Mm-hmm. And so not only can you discover the right trade or investment on our website, and but you can also execute through us and get that investment in your account. And that's not where our service ends. We sort of continuously monitor that investment for things such as assignment risk. And then when the investment matures, we give you options again to sort of roll the investment into sort of the same investment or into a similar investment or a new investment.
Who's the typical client on your site? Who's your typical investor that makes use of your site?
It's the bulk of the investors we service are through financial advisors. So independent financial advisor, let's say a registered investment advisor, would have a set of clients. The financial advisor would use the website to enable these investments for their clients. So in that sense, the financial advisor is using bulk of the features of the website, but then they also make to the end client the website accessible if they want to discover investments themselves or they want to look at the existing investments. So it's a complete investment platform from that perspective, all the way from investment idea discovery to execution to reviewing the investment on an ongoing basis.
And okay, so could you so you do it for individual equities too, right? As well as the
Yes,
indexes? Okay, so let's say
absolutely.
I had $50,000 that I wanted to put in Apple right now. It's trading at 110.16. Just could you just kind of, and I want to have some downside protection, and I don't mind if I'm giving away a little bit on the upside, but I really want some downside protection.
Yeah, so like you would just go to the website, let's say westfin.com, and you would just right up front it gives you that search bar, makes it very easy for you to know where to start, and you would just put in the ticker of Apple. So I just did, and as we are talking, I'm just gonna sort of walk through it. So it takes you to a very simple user interface where the first thing you do is you pick your investment term. So let's say I'm looking to make an investment for about a year, about 2 years. So I picked the investment term of January 19, 2018. And to your earlier point about options, so the investment term that I'm picking maps onto what option expiries are available for Apple, as an example. And then I have a slider where I can slide and sort of pick an investment customized to Apple. Do you have a preference, like how much downside protection you want over like a 2-year period?
I mean, as far as percentages or as far as point wise?
Yeah, so Apple's trading at
110.
about
I
close
mean,
to
yeah. I mean,
110. Yeah,
5 points. 5 points on the downside, and want to get 10 to 15 points out of it on the upside.
sure. So let's say you want to be protected between hundreds from 110 to 100, so which is about 8.5% downside protection.
Correct.
And then I'll solve for the upside so that you pay almost the same price as buying Apple, which is about 110.
Mm-hmm.
So you go to the website, you slide the sliders to express the protection level, which is starts at 110, goes down all the way to 100. And then you press this button which says solve for the max growth opportunity so that I pay the same price as Apple. I press that button and it tells me on the upside I could go up all the way to 165, which
Whoa.
is a return of 51%. And I pay exactly the same, well, actually a little bit less than paying what Apple is trading today. And I could get this in multiples of 100 shares. So I just built an investment for $10,000. You could increase that to 20,000, what have you. And yeah, just press the button if you're and sort of re-implement the strategy in your account that you have opened through us.
What if I wanted to short a stock? Could you set me up with some parameters on that to protect me?
Say one more time.
If I wanted to short a stock, does it work in reverse, giving you parameters, to, clip your loss and then, have some downside potential?
Yes, so you could build that thing in inverse. We don't offer that right now to all investors. We do offer it to sort of more sophisticated financial advisor kind of investors. The more popular strategy that is also used is just plain out inverse, the two options. So like effectively shorting, but through options, which sort of ensures that you know what you're paying for that inverse exposure upfront.
All right, we've been on the line with Karan Sood, co-founder and CEO of Vest, giving you a different way to approach the markets. Karan, thank you for coming on. We enjoyed it. We'll speak to you again soon.
Great thing. Thank you.